All right. Welcome into the chat. Welcome into the stream, ladies and gentlemen. Yeah, so a lot's changed since our last stream. We need to proceed with caution because we're getting warning signs that we can no longer ignore. I'm going to get into the finer details of what we're talking about. If you're in the Discord server, you already know what we're talking about, but I'm going to break it down here. Basically, our bull market, bear market bias has shifted. Our custom indicator has shifted from a bull market bias to a bear market bias. Sound is on. All right, let me know if anything's all messed up. I've been having troubles with the stream lately. Can't really figure it out, but yeah, just let me know if there's any problems in the stream. So welcome in, everybody. We got Trujillo Dive Center, long from 91K until 120K. Nice one. It's we're on a bounce for sure. Varying Viewpoint GM, good morning. B-Man, how's it going? Powell W, how's it going? Are you looking for shorts since we're in the red wave? We'll get into that. Cali Trader joining us. Hope you're doing all right, Cali Trader. Hope you're not affected by the wildfire situation in LA. Shout out to anybody who's in LA. That's my old home. Briefly, that was my old home. Lived there for about 4 years, so hope everybody's doing okay over there. I'm sure the air quality is terrible when you're in the good spots, and if you're in the bad spots, I mean, we know what's going on over there. All right, let's not dilly-dally. Let's get into the charts after this quick little disclaimer. This content is for educational and entertainment purposes only. I am not a financial advisor, and trading or investing in cryptocurrency comes with risks. Always do your own research and consult with a professional if needed. Any use of trading bots or strategies should be tested and fully understood before implementation. Stay smart, stay safe, and trade responsibly. Let's get into the charts. All right, so we're going to start things off here on the daily. My camera is a little off here. I don't know how to fix that. I guess I could just do one of these. There we go. We're now looking at this in a very different light. So let's just turn off Bangbox for a moment and let's turn alphanumerics on and explain why we're looking at the market from a bearish point of view. So this band below us right here, this is our bull market support band, I guess you could say. So when this wave is green, we're bullish. We're very bullish when this wave is green. The moment that it flips to red, which is a breach of these, rising levels, it's when the wave is green, these levels are rising. When the wave is red, those levels are declining. Currently, you need to break an all-time high. That target will last for a week. Next week, it will be a lower target. The week after that, it will be a lower target, and it will go lower until we breach it to the upside. But yeah, this is not good. This is something that we pay very close attention to. It's something that we hold in high regard inside of the community, and it's not something that we ignore. So before we get too into it, I do want to preface this entire conversation, which is going to be looking at things in a bearish light, that I'm still bullish on the cycle. I'm still bullish on the overall crypto cycle. I'm bullish on the overall Bitcoin cycle. I just happen to be forced into a position here where we need to approach things conservatively and maybe remove leverage from the portfolio and approach the market with caution. So, let's just clear the air a little bit there and just say that I'm still bullish. I'm still bullish even though I'm taking some bearish actions as a result of this red wave flip. So we're looking at this as a Wyckoff distribution. I've been observing this formation for a while. Those who have been following me for a while also may have been surprised why I wasn't talking about the distributional structure that we were looking at. The reason that I was ignoring it is the green wave is my bias. The green wave is my bias, and consolidations can be very choppy, and they can give the illusion of a full-on distribution without actually breaking down. So up until this point, I've been approaching it with optimism, and I've been approaching things saying, we're seeing some characteristics of distribution, but I'm assuming that it's just a choppy consolidation that is in fact an accumulation, and we will break out to the upside. That bias has flipped now that we have the red wave. And now we're going to look at this as kind of a distribution. So we've got our preliminary supply, our buyer's climax, secondary test, upthrust. Now, an upthrust is one of those key price movements that you really need to be watching out for when you're observing a consolidation, because it's one of the key characteristics of a distribution. Now, what is an upthrust? An upthrust is a breakout with an immediate rejection. So you'll break out past a level, it will immediately reject back down to the level of the breakout and below. So we saw that initially here. We had an upthrust that actually, is a Darth Maul candle. It wicked out on both sides, but it did come, it broke out new highs, fresh highs, and then came all the way back down to support. So kind of a sign of weakness, not my traditional sign of weakness, because a traditional sign of weakness is a new low. Okay, so that is one point for the bulls. My traditional sign of weakness makes a new low. This one did not make a new low. It made a higher low. So the bulls did show up at support. Beyond that, we got our potential upthrust after distribution. So we got this upthrust, new all-time highs, came right back down, revisiting that support level. This support level has been very important. We've made note of that here and in the Discord, and we've tested it a couple times after that. Then we were very, very bullish when we got this breakout, because I was under the assumption, we've had a couple upthrusts that has been absorbed. The bulls defended this level very well. And that ended up being an upthrust. We got that breakout reversal. So that's our third upthrust inside of this consolidation. And that one actually did break below the support line, giving us a sign of weakness. Now, the sign of weakness, as we can see in the last 2 days, it was bought up very aggressively. It ended up being a dragonfly doji, which the market is very bullish on. But, I'm still approaching this consolidation from a bearish point of view now, just because of the fact that we have such a powerful indicator that has been right so many times with bias, that, this is good to see. This is good to see. I like to see this green candle and the demand coming back in, but I'm apprehensive that it's going to give us the ability to break past a new high. If we take out this high of the upthrust on volume and it does not turn into an upthrust 2 or 3 days later, that's a very different condition, and we'll have to revisit that as it stands. But currently, as it stands right now, I'm expecting us to come just shy of this resistance level at around 67,000 and reverse. Now, this will confirm as a distribution if we take out this low. If we take out this low at 89,224 on the index chart, that's going to be a pretty strong indication that this distribution is actually playing out to the downside. And I would not be surprised if we see, kind of a scary move below that point. So we really do not want to see price get below 89,200. Even just a wick below that is showing that the demand is not outweighing the supply in the market, and we could come back down and revisit targets as low as $77,000. Now, I don't want to freak people out here. I've been trading Bitcoin for a very long time. I know how Bitcoin moves, and these more scary targets in the context of a distribution tend to play out. Again, I'm macro bullish on the cycle. There's a lot of new people coming in, particularly as a result of the ETFs, and those people are just not used to the price movements of Bitcoin. we haven't seen a significant retracement in Bitcoin. I think we got 20% correction in this last consolidation back here. Let's actually pull a measured move. From the top of that buyer's climax to the bottom of this was a 33% move. So that's actually, that's in line with what we can expect for these healthy kind of price movements in Bitcoin, these healthy retracements, these corrective price moves in Bitcoin. So if we pull another measured move from the top of the upthrust after distribution, the UTAD, back down to that support level, it's kind of that 30% move. I really don't think we're coming down to kind of this level. A 40% retracement just doesn't seem likely to me. And, you know, even still, we can totally turn around here. This could be, you know, a recovery. This could be kind of a bear trap. But if we do take out this low that we mentioned already at 89,224, then just don't be surprised if we come down to a retracement that would really frighten a lot of the market. But we won't be scared of that. We will know what to do. It will flash the signals. We have a plan on both sides at all times, and we will be allocating accordingly. So action steps for me right now. I started selling right here at support. I sold a little bit more up at the $94,000 level. I've sold a little bit more at the $97,000 level. If we come up to that kind of 98, the underside of this resistance, I'll be selling more. I'm basically closing about 50% of my cycle trade position. A characteristic of my cycle trade position is I do take on leverage. Now, I'm not talking about leverage in the way that you're thinking. I'm not taking on futures contracts. I have access to lines of credit where I borrow money from the bank and I use that to buy Bitcoin. That's a leveraged position. So at this point in time, I am bringing my leverage down to zero. I have my main spot account that I am still holding for the duration of the bull market. I have my hodl that I'm just not selling. I've got a hodl position that I just don't mess with because Bitcoin is, you know, it's a very volatile asset in both directions, and TA can sometimes, you know, you got to be aware of bull traps and bear traps. But yeah, those are the actions that I'm taking right now. So I am lowering my position. I am lowering my overall exposure to the market, and I am removing all leverage from my positions so that I will be liquid and ready in the event that we have some sort of a dip down to this level. All right, Powell W, still think we turn green sooner than later. It's not outside of the realm of possibility, and this is what I love about the strategy. So, you know, a lot of people think that technical analysis is a way to predict the future. It's not. If you think that you can tell the next move of Bitcoin based off of the structure of a candlestick, you can't. And the sooner you adopt that mindset, the better it's going to be for your overall portfolio. What we're doing in these markets is we're creating rules, and those rules develop a strategy, an overall strategy as to how you're planning your movements inside of the market. So you can also look at it as if-then statements. So we employ a bunch of if-then statements. My if-then statement for the green wave is if we turn red, I remove leverage, sell 50% of my cycle hold. So we hit the red wave. My if-then statement strategy dictates me to change. But yeah, in order for us to flip green, currently that price is right up here. You see this little dot. It's kind of hard to see. It's not these series of lines right now because this is a fresh flip, but this fresh flip is up here at the all-time high. So this is the all-time high. The next week, it will be down at around 105. The week after that, it'll be at around 102. The week after that, it'll be down to 100. So, you know, this effectively becomes a trend line. You'll see just a declining price of the trend line, just like we saw an ascending price trend line for our bias flip, right? So now we're looking at a trend line flip to the downside. So every week that goes by, we technically get more bullish. Every week that goes by, we need to see lower and lower prices for us to flip our conviction back to the bull side. But right now, because this is a fresh flip, it means that the all-time high of this local consolidation is our target to flip that bias back to green. I'm a little surprised given that we've got a new president about to take office. Surely that's an upward trend. So yes, but the problem is, and this is a problem that's in, this exists in all markets, in all assets, is expectations of the herd are usually counter traded. So because everybody is expecting that, day one, Donald Trump takes office, he's going to put an executive order that makes all these crypto friendly policies. That's a very high expectation. And I just don't think that it's a day one priority for him. We live in this little bubble where everything seems like, the whole world is moving in our favor with cryptocurrency and whatnot. But most of the world still doesn't give a shit. They really don't. Therefore, most of the world is not going to want to hear Donald Trump come into office day one and talk about a bunch of crypto shit. They're going to want him to talk about other stuff that's going to help the majority of people who don't hold Bitcoin. I'm not saying that there won't be policies enacted. I just don't think it's going to be a day one thing. I don't think it's necessarily going to be an executive order. It could be, we'll see. But I think the expectations are too high for short-term price performance based on him taking office, that when he takes office and things don't happen, people are going to capitulate. People are going to capitulate. They're going to feel like, he's lied, like every politician. They're going to dump their position. So I am very much so watching that potential play out, because not a lot of people are thinking that is a potential. And when not a lot of people are thinking that something can happen in the world of Bitcoin, that's usually the thing that happens. Yeah, so we're watching this distribution. We're going to see if it plays out. But let's go back to kind of a bullish context of things. This consolidation from the preliminary supply, it's only 63 days of price action. That's not a lot. That's really not a lot. And one of the rules of Wyckoff is you need to look at cause and effect. So effect is the price and the cause is the consolidation. So the longer you trade sideways, the longer you accumulate, or the longer you distribute, the larger the effect of that consolidation has on price. The saving grace here is this consolidation is only 63 days old. So if we break down here, it's not going to be a big break. It's probably not going to spark a bear market. It's just not a big consolidation. It hasn't built up enough of a cause for us to be worried about really large extended price targets. And one of the ways that we can do that too is to employ the use of point and figure charts. So let's just pull a quick point and figure chart here. We'll go from the buyer's climax. We've got 10 bars at 600. Let's just do some quick math. So we've got 10 columns times the box size. The box size can be seen up here. It's a 600 box size. Times 600, that gives us 6,000. Times the box reversal, which is 3, which gives us $18,000. So the value of this consolidation is $18,000 worth of a cause built up, the cause. So the effect, the resulting effect is around $18,000. So when we pull a target here, we go down $18,000 from that high. We've got a price target of $87,000. And when we do the same thing from the LPSY, we've got, again, kind of an $83,000 level. And if we pull it from potentially a swing high up here at the LPSY, last point of supply for those who are not Wyckoff enthusiasts, we're looking at around $80,000. So let's just mark those levels down as potentials. And those are kind of the support levels that we would anticipate based off of the fact that this consolidation is only 63 days old. It's not very old, which means it's not very powerful. And that's what we want. We don't want a powerful distribution. We want a weak distribution. And that's kind of what we have so far. So just a warning out there. You know, we can see price acceleration past 89,224 on the index chart. And the targets would be anywhere from 87 to 83 to maybe that psychological $80,000 level with extended wicks down to the kind of that 76 level. But I don't think we'll stay there very long. So caution, do your own research, allocate accordingly, don't let anything that I'm doing sway you from your pre-existing trading strategy. This is my trading strategy. You have your trading strategy. My strategy is telling me to take action. Your strategy may not be telling you to take action. So don't sway your positions based off of just some random dude on the internet. But yeah, let's take a look at Bitcoin dominance. Let's move this up to a weekly chart. We had a nice little sign of weakness here, and the alts felt it. We had a nice little move here in the alts, but you know, in this context where we're flipping our bias to bearishness in Bitcoin, we could see potentially new all-time highs here in Bitcoin dominance, which is not a favorable environment for Bitcoin. So just watch this. We're not quite there yet. We're getting real close. We're getting real close to that altcoin season, but it just hasn't flipped. We have what I can say about this area right here is smart money is allocating into alts, but not aggressively, and retail is not FOMOing into alts, and we don't have new money coming into alts. So there are signs of a rotation taking place, but the effects of those funds rotating away from Bitcoin into alts has not taken place yet. So just be aware of that. Something else that's not really helping is the strength of the dollar. The strength of the dollar is doing incredible. Shout out if you are in the US. I mean, yes, you're experiencing a lot of inflation, but at least your currency isn't devaluing and plummeting like every other currency. The euro is taking a hit. The Canadian dollar is taking a hit. The Australian dollar is in the trash. The yen is just collapsing. So if you are an earner of US dollars, at least you have that on your side. You know, short-term price preservation is actually on your side here if you're holding the dollar. But this is not great for risk on assets because it's actually okay to hold dollars. The dollars it keeps rising in price. I think this is going to be a bargaining chip for the incoming president, Donald Trump, when he negotiates with new trade agreements. He'll say, you know, if you're not going to play with America, you know, we're just going to continue to make the dollar stronger and stronger. The United States is in a very unique position where they have the ability to strengthen the dollar. Oftentimes, it's better for them to weaken or keep the dollar neutral, but the dollar's doing really well, and other countries are finding it hard to keep up, and they're getting margin called on international debts. S&P. So the S&P 500 still in an uptrend, looking great. You know, if this kind of represents a more conservative and risk-on approach to the market, people are still investing. We still have an uptick in the overall markets. People are allocating to the S&P. It's looking good. You know, there's nothing wrong with what we're seeing here on the S&P. Similar story here on the NASDAQ, no break of structure, higher highs, higher lows. This is what you want to see. So we just have a continuation of higher highs and higher lows. This is bullish for the overall market. So the dollar is strong. The S&P 500 is strong. The NASDAQ is strong. We're just needing to be careful about Bitcoin. Let's take a look at MicroStrategy, see how they're faring. Not too bad. Not too bad. I mean, a little bit of a blow off top here. We'll see how much of a consolidation needs to take place here on MicroStrategy for this to continue higher. But overall, not a bad chart. A little overheated. I wouldn't be buying at these levels personally. I'm just not going to touch MicroStrategy. I'd rather just buy Bitcoin. But, you know, if you want to buy MicroStrategy, you do you, man. You do you. All right, no real point in getting too deep into the weeds with altcoins. Like I said, I just don't see a lot of them doing much of an outperformance. Let's take a look at some of them on the Bitcoin pair to see if there are any outliers. So Cardano still in a downtrend when it comes to Bitcoin, but we've got kind of some levels that we're watching here. I want to see it get above 1500 sats, 1500 sats per ADA. And if it can do that, then it will probably climb to higher prices. But as it stands right now, it's in consolidation. Not a lot of people talking about Cardano, which is a good thing. I like that. Let's take a look at Bitcoin Cash. Bitcoin Cash community was making a shit ton of noise, and I have no idea why. Look at this chart. It's actually embarrassing. Bitcoin Cash is just the loser here. 450,000 sats per Bcash, and in a downtrend against Bitcoin. I mean, you could say maybe we're at a support line, but I'm just not too bullish on Bitcoin Cash overall. Doge looking moderately okay, but again, it could trigger some sort of longer term consolidation. We're looking at the weekly chart here. Anytime our bias flips, you always zoom out. So our bias is bearish. We're looking at things on the weekly to get a clearer picture as to what's going on. All right, let's catch up with the chat, see what's going on. We got 21 viewers. We got 10 likes. Do me a favor, click the like button, ladies and gentlemen. It doesn't cost anything and really helps out the channel. Speaking of things that don't cost anything, if you aren't already in the Discord, why not? Come into the Discord. Go to blackbox.pro. That's BLKBOX.pro. Sign up for your free Bitcoin trading bot. You get a free Bitcoin trading bot. You get a free Discord community. You get free trading signals. Everything we offer is free. We're a good collaborative community that is sharing alpha on ordinals, runes, a lot of the Bitcoin ecosystem, also the altcoin plays when I think that they really become a significant part of the market. So if you haven't already set up an account, go to blkbox.pro or follow the links below and we'll get you signed up and in the group today. But yeah. Let's get back into the TA. ETH BTC, let's see how our favorite shitcoin is doing out there. Continuing to bleed out. I have literally been talking about this support level at 3 million sats since September of 2022. It's been a very long time. I've pissed off a lot of people. A lot of people just couldn't accept what I was trying to say. They got angrier and angrier, and now we're here. Now we're down at 3 million sats. And, you know, with Bitcoin under a bearish posture, if we do break down in Bitcoin, this chart's going to go at or below 3 million sats. And that's where I would become interested as a buyer. So if you guys are looking for a channel that has a no bullshit approach to the market, that's not going to sugarcoat and not going to shill, I don't take paid ads at all. I don't support individual crypto projects. I don't accept payment from any project. I give you clear, concise, raw, unedited opinions on what I'm seeing in the market, being that I've been a trader in this market for about 10 years now. And I called this for years, literally over 2 years. I've been saying this and it's playing out. Not to rub salt in a wound, but here we are. here we are, and this is going to continue. You know, we need to break this red line. This red line has been on this chart for years. It's been on this chart for years. And I said, as soon as we break this red line, as soon as we get above it, you can be bullish. And if you had followed that advice and held Bitcoin instead of Ethereum, you're laughing. You're doing much better. You're doing much, much better. So shout out to those people that did, you know, adjust their exposure to Ethereum as a result of me, you know, banging this drum here and talking about how Ethereum is just simply not the play. And what I said was the play was Solana. Solana is not in a great position, but man, it's been a superstar this cycle. From the bear market lows, from the bear market low here to the high is a 500% gain in Bitcoin. The dollar pair is way higher than that, but you know, a 500% gain in Bitcoin. We could see a little bit of a shakeout here. This structure is not ideal. We keep kind of breaking below this support level, so we could see a move down here in Solana. But it's everything that I'm talking about hinges on the back of Bitcoin. So when Bitcoin brings confidence back to the market, brings confidence back to the space, then it's going to be good. It's going to be good. Gravy wants to take a look at Dog. Yeah, we can take a look. I mean, I think a lot of the, as I say every time, I think ordinals are just, it's not the time for ordinals. Ordinals will have their time, but this is why I like to trade Bitcoin. Bitcoin's always moving. Bitcoin is very predictable. Bitcoin is always having its ebbs and its flows, and, you know, 2 out of every 4 years, Bitcoin is making you money. Half of the time, Bitcoin is making you money, and it's not making you a little bit of money, it's making you a lot of bit of money. When you get into the very low market cap altcoin space, it makes these big moves that gets everybody really, really excited, and then it peters off and it just melts away, and all the gains melt away. The time period of which those types of coins really do well is about 4 months every cycle. You get 4 months every cycle. Bitcoin is giving you returns 2 out of every 4 years. Altcoins are giving you returns 4 months out of every 4 years. So it's a very short window. It's an exciting window. It's a very explosive window, but it's very short. And I just don't think that the ordinal space is going to be a beneficiary of that type of environment for realistically months, weeks. From an optimistic take and a more realistic take, we're looking at months. You won't find Dog on TradingView. It is a rune, so you got to go to Magic Eden, and you got to click onto runes here at the top, and it'll be the #1 rune. And it hasn't moved too much. Let's actually pull up the TradingView chart here. Let's go to the daily chart. Don't want the trickery in the space to fool anyone. It's not looking like it's loading the whole chart, or maybe this is the whole chart, but you know, it hasn't done much of anything. Now, this could be as a result of the fact that this was a very large airdrop. So that's kind of, it's a catch-22 with airdrops. Airdrops are by far the most effective way to market your project. And in this space, marketing is very, very, very important. Very important. So you want to have a well-marketed, well-known asset out there, right? But the flip side to that is you gave free coins to a bunch of people. And when you give free coins to a bunch of people that don't actually care about the project, that might just be Bitcoin whales that just like, oh, sweet, I got a bunch of free shit, let's just dump it on the market. You get a lot of people offloading because they just don't care. They don't care about the project. You know, oh, free money, boom, sell that, let's buy Bitcoin. So you have a lot of supply that you need to work through. A lot of supply that you need to work through. But the bonus to that is once the market has worked through that supply, now you've got huge brand awareness. You've got a lot of players who are convicted to the project, and all the supply's gone. All the supply's gone. So it is a recipe for success. It's just a long burn. It takes a while for that to really to take place. Currently sitting at 5.36 sats per dog. This can be a huge winner for 2025 in the right circumstances. Still tons and tons of volume. It's almost 4 Bitcoin in volume in the last day. So there's a lot of money changing hands here, but it just hasn't popped. Just hasn't popped yet. So, and this is a true statement across the board with many runes and many BRC20 tokens, many ordinal projects, all of it. You're seeing a lot of lack of demand. Dog on MEXC. Yeah, I think that one. Let's see here. There's so many dog tokens. Dog go to moon. Yep. So they do have a chart for it now. Yeah, they do have a chart for it now. And this is the dollar chart, not the SAT chart. So it's sitting at basically a half a penny. Half a penny right now. So you can really stock up on a lot of dog. Let's take a look at, let's do some comparative analysis here. This is the total cryptocurrency market. It's not a bad chart actually on the weekly. It's looking okay as it stands right now, but we have, 5 days left on this weekly candle, so that can totally change. But let's add total 2 and total 3. And let's do 1 year in frame, and let's see how the market is progressing. So total 2 is below. Now total 2 is being dragged down by Ethereum. So yes, Gravy, you can buy it on MEXC. It's being dragged down by Ethereum. Total 3 is being held up by Solana. So the price of Bitcoin and the price of everything else except Ethereum is actually pretty close. The total cryptocurrency market is up 105% in the last year. And the total cryptocurrency market, excluding Bitcoin and excluding Ethereum, is also up 100%. If you are holding Ethereum as a part of that index, it's only up 73%. So yeah, Ethereum's got a lot of catching up to do. The market has a much stronger appetite for higher risk, lower market cap altcoins than it does for Ethereum. And I think that that's kind of a fair statement overall. It seems like this cycle in particular, there is a huge dichotomy between those who are really focusing in on basically a sure thing with Bitcoin. You're not going to go wrong with Bitcoin. And then there's the nihilistic gambler approach, like the cohort of individuals, the cohort of market participants this cycle that falls under the degenerate gambler category is the largest I've ever seen in any cycle. There is not a lot of fundamental crypto YouTube channels out there. Everything is just memes, pumponomics, all this stupid shit, pump.fun, people having fun, all this degenerate gambling stuff. So that's a very interesting characteristic that is pegged to this cycle, but there's clearly a lot of loss in that space as well. because even though that's the largest cohort I'm anecdotally observing in the market, Bitcoin is still beating it. So like for the first time in a long time during a bull market, holding Bitcoin is better than all of that risk. So if you're taking on a shit ton of risk, you know, the stats don't lie. Your portfolio's not been doing well. The amount of risk that you're taking on, you have a high likelihood of buying into stuff that's just going to go down and it's not going to come back up. And as a result of that liquidity constantly changing hands and this game being played on the gambling side of things, just holding Bitcoin is outperforming it. So shout out to the true blue Bitcoiners out there, the orange Bitcoiners, the orange pilled lads, because this is kind of redemption thus far. You know, it's been hard to just take a very heavy Bitcoin approach to things because the altcoiners had a reason to be altcoiners. This time, they don't really have a reason to be altcoiners because Bitcoin's actually outperforming the altcoins. Blanket statement across the board. When you take a look at the full data set aggregated across all coins, you got winners. Of course, there are outliers in the altcoin space. Of course, there are outliers. The point I'm trying to make is the amount of risk that you take trying to find the altcoin that outperforms is astronomical. And then the other thing that you could do is just buy Bitcoin and you do better than pretty much everybody else. So this is why we heavily weight towards Bitcoin. Not saying don't buy altcoins. I'm just don't ever find yourself in a position where altcoins make up more than 20% of your overall portfolio. No. You're just setting yourself up for disaster if that's the case. I'm sure a lot of you people have already done that, and I'm sure the portfolio that you're looking at is telling as well. Let's have a peek at gold here. Let's get rid of these. We don't need these anymore.